Hi, everybody that's joined the webinar. We're going to go through the buying process. You have several presenters. So the way this will kind of work is that I'm going to kind of walk you through the process, and then I'll introduce people to speak when their part of the transaction is relevant in the process. And they'll tell you what they do, and then I'll pop in and out to kind of explain where we're going next in the transaction and who you're going to hear from next. At the end, we'll answer any questions. So if you have questions, if you could do us a favor and put those in the chat. And if you could also make sure to, when you hit send, to send it to all people. That way we can all see it, because out of all 6 presenters, only 1 is hosting the event. So if you only share it with the host, then the other 5 of us won't see your questions and we won't be able to answer them. If you stick on the call until the very end, we're going to do a gift card giveaway. We have several gift cards for different local restaurants and local businesses, and we'll have some like a Q&A, so pay attention. And if you get questions right, then you will have a chance to win a gift card. Sound good to everybody?
Yeah.
Great. Okay, so real quick, I'm going to share a document with you via the chat. You guys can download it. And then I'm also going to share my screen, and then we'll kind of just go through the process. Sound good? You guys won't have to try to spend your time. Sorry. In real life, I would be asking you if things sounded good, and you would be nodding in public, and I would be like, "Oh, yeah." Good. Okay. So I just sent you guys a file. You are welcome to download it and open it. And I'm going to share my screen with you guys too, so you guys can see what I am talking about. I made a presentation just for this, you guys. I don't make presentations anymore. I feel like PowerPoint has kind of worked its way out of what we do in real life now. Like, no one uses PowerPoint anymore, but I'm old, so I still use PowerPoint.
I was about to say, you're throwing me under the bus here as I'm looking at my PowerPoint.
Yeah. You're like, I have a PowerPoint too, Angel. Awesome. Glad to hear it. That makes me feel really good. Zoom, share screen. Okay. And here we go. Can everybody see that?
Yes. Yeah.
All good. Right. Fantastic. Okay, so we're going to go through the buying process. Step 1, the first thing you're going to do is choose agent. Hopefully it's me, but you don't have to choose me. You do want to choose somebody who's experienced, that knows the neighborhoods you're considering, knows different loan products, and works the way that you like to work. So if you are a person who's really responsive, you might want an agent who's really responsive. If you're a no news is good news kind of person, then you might want a more relaxed agent. But just make sure that you choose an agent, and you want to do that early on, because in Texas, if you don't have an agent representing you, any agent who unlocks a door for you is actually representing the seller. So make sure that you get a representation agreement so that you are being represented the best possible way, and that you're getting all the tips and tricks and confidential information that you need to make decisions when it comes time to making an offer. The next step is pre-approval. These two actually can sometimes be swapped. You can sometimes do the pre-approval and then the realtor, but usually your realtor is going to recommend some lenders. So the pre-approval is really important, because you need to know how much you can actually afford to buy, and that's usually determined by what a bank is willing to give you. So you kind of need to give them the opportunity to look at your finances and decide if they want to give you money and how much they can give you, and then you can decide what you want to spend. You want to choose a lender that is knowledgeable about the loan products that are available and the loan products that you're probably going to use. And you want to choose somebody who's going to guide you along the way. There's a lot of lenders out there who do so many transactions that they expect you to know what you're doing. And you probably don't, because it's your first transaction. So you probably need someone to hold your hand a little bit and guide you through the process and make you feel comfortable about giving up a lot of money. So to that end, I'm going to let you talk to Chad Helmcamp. He's going to tell you what he does, and also probably a little bit about how the market is currently being, like what's happening right now, how COVID-19 has affected the market. Go ahead, Chad. I'm going to unshare my screen.
All right, perfect.
Somehow, some way. Ta-da!
All right. And we have some more folks joining us, I believe, so hopefully they will pop in here momentarily. You'll have to bear with me as I'm kind of monitoring the chat. We enable the waiting room, and so I just have to make sure I don't miss anyone. Bear with me for a second.
Looks like Serena's with us. Hi, Serena. And Mary. Hello.
Hi, Mary. I invited her.
All right.
And oh, cool. We've keep an eye on your chat. You'll see that we are adding files there that you can download every once in a while.
All right. So everyone should have the ability to mute and unmute themselves. So please do so as you see fit. And just to kind of repeat what Angel had mentioned earlier, if you have questions, please put them in the chat box over to the right, and we're going to try to go through at the end and make sure we answer everyone's question. But yes, thank you all for joining us this evening, and we're excited to kind of walk you through this process. There's a lot that goes into buying a house. It just so happens that the mortgage tends to be a fairly large part of it unless you're independently wealthy. And so, I don't work with a lot of independently wealthy people, so that's good. Hopefully, all of you need me on this call. Although if you win the lottery, that's great too. All right, well, let me share my screen and we'll kind of walk through this process very quickly. All right. Can y'all see that?
Yes.
Okay, so you can see this. Okay, good. All right. This is very weird. Not quite used to this yet. All right, here we go. Okay. The home buying workshop. All right, here we go. Mortgages 101. First of all, there are a lot of different types of lenders that you can choose to work with. You have mortgage bankers, mortgage brokers, portfolio lenders, and hard money lenders. I happen to really fit in the first two boxes. I am both a mortgage broker as well as a mortgage banker. What does that mean? If I'm a mortgage broker, what that means is I am working directly with the financial institution who is going to underwrite and approve your loan. If I'm serving as a mortgage banker, I may still work in that capacity, but ultimately I'm going to close and fund the loan in the name of my company, BWC Lending. And then after we close, I will in turn sell this loan to the servicer after we close. At the end of the day, I will tell you there's a lot of great lenders out there, but in my experience, just like anything in life, you're really only as good as the person that you're working with. How conscientious are they? How diligent are they at answering your questions? And is this their true profession? Okay. I've been doing this for 17 years. I love what I do. I only do mortgages. I get asked by people all the time, hey, well, why don't you do this and why don't you do that? I decided a long time ago I wanted to be good at one thing, and that's it. And I'm pretty okay at it for the most part, right, Angel? Okay. All right, how does the lending process work? Okay, there's a lot of steps involved. There's a lot of people involved. A number of years ago, the biggest complaint people have about the mortgage business is that or about the home buying process is there's so many people involved and there's so many things going on and we're sending the same thing over and over again. And sometimes that does occur in our business. Sometimes it's just people don't realize that things are changing as we work through the process. At the end of the day, I did some math, and normally if we were in front of a room, I'd ask anybody, guess how many people are involved during the process. Some people would say 5, some people would say 8. Well, when I put a pen to paper, I came up with 20 to 22 names. And then a week later, I had another transaction and I added 6 more names to the list. And so the point is no matter how many times I'd sit down and try to add up how many people are involved, there's a lot. And so there's somewhere between 20 or 30 people involved. And so our business has a tendency to be fairly inefficient. And so that's why it's so important to have a team like the one Angel has put together on this call so that we can all work together. If I need something from Travis, I can call Travis. If I need Mark to get me an insurance binder ASAP, he'll get it to me. If the appraiser's falling behind, I'll call Alex and Alex will get it moving along for me. So that's what's really important. But our process, generally it starts with a consultation for me. I usually spend 5 to 10 minutes talking about goals and objectives. We move into the formal loan application. Once you go under, to get you pre-approved. Once you go under contract, your loan goes into processing. That's when all of these people involved start working. Angel will be working with you in the beginning stages. Once we have everything we need, your loan goes into underwriting, your loan gets conditionally approved. We satisfy whatever those conditions may be. Maybe it's an updated bank statement or something like that. Once we have that done, we submit it for our final approval. Our goal is we like to get loans ready to close in 21 days. We close pretty consistently in 25 to 30 days. We can close faster when needed. I tell people a 30-day contract is pretty normal, and we have no problem meeting that time frame. How do you, waiting room, hold on, excuse me. Okay. Sorry. All right, perfect. So how do you qualify for a mortgage? We call it the 3 C's qualifying for a mortgage: credit, capacity, collateral, and capital. Okay. Credit is the number one thing that most people have lots of questions about and don't have a lot of information about. So I spend probably more of my time talking to people about credit and how to build credit, how to repair credit, things of that nature. But we'll go through each of these as we work through it. First and foremost, your credit score. I don't know if anybody on this call knows what a great credit score is, but I will break it down for you. In today's day and age, to qualify for the absolute best of everything, you have to have a 760 or better credit score. Okay. Every 20 points your score drops below 760, it is going to increase the cost of your borrowing. Okay. And so just keep that in mind, that, and usually what I tell people, that for, depending upon what loan type you're looking for, the credit score becomes more critical. So if you're looking for a conventional loan, the credit score, as it drops, the rates are going to go a lot higher. If you're putting less than 20% down, the PMI is going to be a lot more expensive. If your credit score drops below 700, that's when government loans start to become more competitive, like FHA and VA. And we'll talk a little bit more about that here shortly. As you can see here, this is what goes into a credit score: your payment history, your utilization, i.e. the amount you owe. So payment history by far is the biggest thing. I had a client that reached out to me today. They wanted to refinance. They literally just missed a payment on their mortgage last month. And I don't know what their score was before, but I know today it dropped low enough that they no longer qualify. Today, to qualify for a conventional loan, you have to have a 640 credit score pretty much across the board. And their score was around 590 when they reached out to me. And so 640 is what you have to have today. Prior to COVID-19, that number was more around 580. If you had a 580 or better credit score, you could at least qualify for FHA or VA. Conventional has been at 620 for quite some time. Utilization or amount owed, that's basically if you have a $5,000 credit card limit and you owe $4,999, then that's going to weigh on your credit score. Even worse, if it's a $5,000 limit and it's $5,050, which is something I saw earlier today. Okay, so when you go over your limit, that's a problem. Length of credit history comes up a lot, especially with our younger clients, millennials that don't have a lot of credit history. Usually you want to have 2 or 3 open active trade lines. A trade line is going to be a credit card, an auto loan, a student loan, a mortgage. All of those things equal a trade line. You want to have 3 or 4 of those, and you want them to be at least 24 to 36 months in order to establish a good solid credit history. And then the last 2 things are new credit and credit mix. So the types of credit, i.e. An auto loan is an installment loan, credit card is a revolving debt, and things like that. Newer credit trade lines do weigh on your scores temporarily until you start building up a history on those accounts. Feels very weird not to be interacting with people here. Am I going too fast?
No, you're doing great.
Okay, all right, good. This is very different. I've never done it like this, so okay.
Yes, it's very weird.
All right, while I'm talking about credit real quick, the number one question I get with every client who reaches out to me is, Chad, will you checking my credit impact my credit score? The answer to that question is yes. However, the people who usually worry about that are usually not the people who need to worry about it. 9 times out of 10, when I pull somebody's credit, you're going to walk away with one of 2 things. A, knowing you're good to go and you can go buy a house, or B, you're not good to go and I can then tell you what you need to work on in order to be ready to buy a house and also secure the most optimal financing. And I encourage people, if you're thinking about buying in the next 6 to 12 months, the sooner you talk to someone like myself, the better off you'll be, because then you actually have time to work on your credit. I cannot tell you how many people that I work with that don't call me beforehand. I pull their credit and they have a $100 medical collection that they didn't know about that's going to cause their interest rate to be a quarter higher or cause their PMI to be $50 a month more. And those things are so critical. And usually I can make a recommendation to who you can reach out to get some of those things fixed. All right, that's credit. Now capacity. All right, capacity just simply means your ability to repay the loan. So in other words, how much do you earn and what does your overall monthly debt picture look like? If you read a book about buying a house, it'll tell you that your housing debt ratio should not exceed 28% and that your total debt ratio should not exceed 38%. Okay. And this is a real basic example here of someone who makes, $15 an hour, works 40 hours a week, or $2,600 per month. Down below, you can see their credit card payment was $50 a month, their auto loan $200 a month, their new house payment at $800 a month. As you can see, I need to update this slide because almost all of this is impossible in today's day and age. But their total debt is $1,050 and their income is $2,600. So in this instance, their debt to income ratio would be 40%. Okay. I probably just need to update these to, $5,000 or $6,000 a month income, something along those lines. In Houston, it is very, very difficult to buy a home in this environment for really anything. It's getting harder to get it under $1,500 a month, but it still can be done. Collateral, i.e. your down payment. How much do you have to put down? Okay. FHA requires a minimum down payment of 3.5%. USDA is more of a rural loan. So that's if you're buying like out in the country areas and whatnot. I personally have never originated or closed a USDA loan, but that's because I live in Houston and USDA loans have a lot more restrictions associated with them. The VA loan is a zero down loan or 100% financing. If we have any veterans on this call, thank you for your service. Obviously after yesterday, even more important. And then the last of which is the conventional loan, which you can put as little as 3% down. So there are lots of great options to have a very small amount down. The challenge is most people go online and they do different calculators. And what the online calculators don't tell you is all of the other costs associated with buying a house. And so at the end of the day, I tell people you've got to budget somewhere around 2 to 3 or 4% for additional closing costs over and above your down payment. Now, the good news is, in some instances, we can negotiate for the seller to contribute to some of those costs. But I always tell people it's very difficult to count on that, especially in an environment where, like we're in now, where inventory is really low. There's not a lot of homes available for sale. And so it's still a little bit more of a seller's market than it is a buyer's market. All right, so next. All right, so here's a good example of cash due at closing. You've got a $150,000 purchase price, a 3.5% down payment. Your loan amount, this is an FHA loan. Your loan amount would be $144,750. So you've got a $5,200 down payment, $6,000 in closing costs. Here's an example of where we're showing if the seller contributes 3% towards closing or $4,500, your total cash out of pocket is about $6,750. Now, when I'm meeting with clients, I always tell them I account for all the expenses associated with your closing, except for what Mr. Travis Kep is going to charge for an inspection. Inspections are a super important part of the process, but we as the lender don't really want to know everything that's wrong with the house. And Travis's job is to tell you everything that's wrong with the house. So he'll do that, but he and Angel will work with you to help you understand, what's important and what's not. All right. Okay, so here, this last slide here, or almost last slide, gives you an idea. It shows you a little chart of what your down payment requirements are. I need to update these credit scores now that COVID-19 has hit, but you can pretty much draw 640 all the way down that column. The seller contributions, this tells you how much you can negotiate for seller contributions for each loan program. The one thing I will tell you is, although you see numbers up there as high as 6%, it's very, very rare that we'll ever have closing costs that much. So if you negotiate a 6% seller contribution, you'll end up negotiating too much. But Angel's usually going to work with me on that, and she's going to ask me, Chad, how much can I ask for to make sure that we maximize the seller contribution? let's see here. Yeah, FHA, very, very flexible loan program. The VA loan is a phenomenal loan for our veterans. We work with a lot of vets and really, really, I love that. That's my favorite loan to originate. And then most of our clients actually end up going conventional with a maximum loan amount of $510,400. The one benefit on conventional is when you put less than 20% down and you have mortgage insurance, the mortgage insurance you pay can and will drop off at some point in the future. And this is my team, and that covers most of the loan process. Angel, did I miss anything that you'd like me to cover? Oh, you know what? Let me show you one thing before I turn it over. Hold on. I had one more thing to show. I think this is probably the most critical thing. Can y'all still see that? Do you see this? The loan options? Okay. So you can't see the loan options?
No, we still see the team. I'm going to take your
Meet
slides.
the team.
Hold on. Oh, that's right. I got to do it through the Zoom. Okay, sorry.
I think if you just close your PowerPoint presentation,
Close the PowerPoint.
then you can probably show your loan options file.
Here we go.
But yeah, you got to reshare.
That's right. Now I know what I'm doing. Okay.
Perfect.
Is that it? All
Yep.
right. Okay. So although the one downside about today's market is that it's still a little bit of a seller's market, the upside is it's an opportunity of a lifetime to buy a house as far as interest rates are concerned. What I did here was I wanted to show somebody, right now the average sales price in Houston is around $300,000. So what I'm doing is showing you what a 30-year fixed rate would have been back in 2018, so about 18 months ago, and what it would be today. And you can see that today the same house would be $230 a month cheaper, and it would ultimately save you about $28,000 over the next 10 years. If you live there a really long time, over the next 15 years, it would save you about $60,000. So it's really, really an unbelievable time. I've never quoted rates quite this low. So it's just really an incredible time to purchase a home. All right.
Okay. Is there anybody in the waiting room?
No, waiting room looks clear. I think we're okay
Okay.
there.
Okay. Okay, cool. Then let's move on to the next section. Thank you, Chad. I appreciate that. Remember, if you have questions, just drop them in the chat box so we can get them answered at the end. I'm sure you do have questions for Chad. Everyone always does. So just start typing away and we'll get them answered for you. I'm going to share my screen really quickly with you guys so you can see the rest of the slideshow. And we'll go on from there to the next presenter. Okay. We're going to open this up. Here we go. Can everyone see that?
Yes.
Great. Okay. So we've talked to Chad. You've worked on getting your money situation figured out, and you came back to me and you told me that your budget is $300,000. And I'm like, that's fantastic. So you and I will sit down and discuss, what type of house you think you want for $300,000. How many rooms? How many bathrooms? Do you need a yard? Do you need a balcony? Do you finishes on the inside? Do you want a fixer-upper? Do you want something move-in ready? And then we'll compile a search on har.com. You may have heard of Zillow and Trulia and Redfin and even HAR. In Houston, Texas, HAR is the best resource to use because that's where we input all the data. So it's the most accurate and it updates in real time. Those other sites syndicate data and pull it from HAR, and they sometimes don't have the information for a day or two, or they pull something a little wonky and the information is not 100% correct. So I'll be using HAR. You're welcome to look wherever you want and send me links, but I would also recommend you use HAR because there's also an app. And with that, we can communicate with each other very easily. And you can favorite things and I'll see that you favorited something and then we can discuss it and set up tours and things like that. Right now, with the way that COVID-19 is kind of affecting the market, we are showing homes, but there's less homes on the market. There's a lot of sellers that are still hesitant to have people in and out of their houses. And for that reason, they either haven't put it on the market or they have listed it, but they're trying to minimize the foot through the house. So you're going to see less open houses and a lot of sellers that ask that you watch videos and walk through the virtual tour online before scheduling an appointment. So you're probably going to do a lot of online research, which you were already doing because that's what we do now. It's just the way we shop for things is with research online, but you're going to increase that. Google Maps is also a great resource. So you don't have to drive past every house. You can hop on Google Maps. You can do a little neighborhood search. And then if the map appears to be old or something, then you can go drive a neighborhood because you want to kind of figure out where in Houston you want to live. You don't want to be looking at all 600 and something square miles that is Houston, plus the suburbs on top of that. That's just a lot of area to cover. So you definitely want to kind of refine it. So we'll do that together, though. We'll figure out what kind of house you want and where you want to live and what you want to spend, and we'll narrow it down. And eventually we'll get to a place where there's just a few homes that you want to see, and we'll schedule tours. And obviously, if there's just one house that you want to see, we won't wait on that house because there's a lot of demand right now and not quite enough supply. So if there's just one house that you really like, we'll go look at it. But we also want to maximize our time together. And if there are 4 or 5 or 6 houses, we want to put those on the same list if at all possible. There's something called the 80-10-10 rule that I think you all should keep in mind. Since we're not all independently wealthy, as Chad mentioned before, we don't get to have everything we want in a home. A good rule of thumb is that if a house has 80% of what you have to have, 10% of what you can put up with and tolerate, and then another 10% of things that you can modify or change or improve, then that's a good house that you should consider making an offer on. And it's just very unlikely that you will find a house that checks all of your boxes and meets 100% of your demands. Even if you were independently wealthy, you had 20 acres and you had an architect and you had a developer and you went and built the exact house you want, there would probably still be some limitations that get in the way of what you're trying to accomplish. So keep in mind that you probably won't get everything you're looking for, but you will get very, very close to almost everything you want in a house. Let's see. Once we find a house that you like and you want to make an offer on it, I will work up a comparative market analysis or a CMA. And that is a report where I go and look at the homes in the area that have already sold that are similar to the houses that you're interested in or similar to the house that you're interested in. And I will take that information and I might make some adjustments based upon how those homes compare to the actual house that you're considering. And I'll be able to come back to you with a estimated purchase price range or an area where you should make an offer between this and this. At the end of the day, what your offer is totally up to you. But my job is to advise you on what you should make an offer on and then kind of give you an idea of if the offer you decide you want to make is going to get accepted, declined, countered, like kind of how I think it might play out based upon my experience. With the offer, you do want to try and be realistic. The way that the Houston market works and has been for several years is most homes are actually priced correctly. There's a saying that realtors get paid to sell houses, not list houses. So you're not going to see a whole lot of houses that are listed on the market and extremely overpriced. That doesn't benefit the realtor who's trying to sell the property, and it doesn't benefit the seller who's trying to sell the property. We usually do our market analysis multiple times to make sure that we're really refining what the house might be worth. So we can list it in a range where it's going to sell and the sellers are going to be able to move on to their next home or their next city or whatever they're trying to accomplish. So when we do negotiate and we see homes selling for less than what they're listed, it's oftentimes 1 or 2%. I would say, that unicorn that sells for 10% below the list price is 1 a year for every agent in Houston, and we sell about 500,000 houses a year in the Houston market. So it's a very small percentage of homes that are grossly overpriced. And again, we're going to use that market data for homes that have already sold so we can advise you on what this particular house is worth so you can make a very good offer that's strong and reasonable and taken seriously. The last thing you want to do is insult someone to where they won't even consider working with you if you came back with a revised offer. So you want to make sure your offers are reasonable. When you make your offer, a couple of things can happen. The seller can just flat out reject it. And they can do that in 2 ways. They may just not respond at all, or they may be polite. They may send us a formal rejection with an invitation to submit a new offer. They could accept your offer. I've never seen this happen, but they could just outright accept your offer and love what you sent over and sign it right then and send it back with, all right, it's done. Let's get this house sold. But most likely what's going to happen is they're going to want to negotiate. They're going to counter your offer. So you should plan on 2 to 3 rounds of countering before we settle on terms that make both parties happy. And at that point, we will execute the contract. When we execute the contract, there are a couple of money items that are due immediately. You're going to pay 2 fees when you go under contract. The first one is your earnest money. The earnest money is typically 1% of the purchase price, but it is a negotiable item. I don't ever see it below 2%. Below 1%. I often see people offering above 1% in the event of a multiple offer situation where they're trying to outbid another buyer, because that's an item that's, something that could influence the sellers without necessarily having to offer more money for the total purchase. So that's due within 3 days, and not 3 business days, 3 real days. So if you execute on a Friday, like by Monday, we have to have that 1% paid. And most of the time we execute on a Friday, Saturday, or Sunday. That's just kind of the way things play out because people are usually looking at homes on the weekends. In addition to that, you also pay a 0.1% option fee. Again, this is a negotiable dollar amount, but oftentimes it's 0.1% or higher. I never really see it as less. This amount is paid directly to the seller, and that is a fee that you pay to have an option period, which is a number of days that you have a right of rescission for any reason whatsoever. This is only common in Texas. Other states do have a due diligence period, but they don't have a unlimited right of rescission. Change your mind, the sky is blue, or you're wearing too tight of shoes that day, or whatever it is that's making you change your mind about the purchase of a home. So the option period is usually 10 days. I've seen it be less in competitive situations. I've seen it be a couple of days more, maybe 12. I've never seen 15 or 20 or anything like that. You have 10 days to kind of back out if you want to. And the seller gets to keep the option fee if you choose to back out, kind of as damages, but that's never more than a few $100s. The earnest money is something that you would get back if you choose to back out during the option period, but you wouldn't get that money back if you back out later for whatever, just for a random reason. There are several contingencies written into the contract that do protect your earnest money in the event you're unable to buy the house versus unwilling. So we made the offer, and you've paid your option fee to the seller, you've paid your earnest money to the title company, and they're going to hold it in escrow. Both of these fees can be applied towards the total purchase price. So they're usually kind of calculated in your closing costs. And up next is the inspections. You want to do your inspections during the option period. You can obviously do them later, but it wouldn't do you any good because after your option period is over, you don't have just unlimited right to walk away from the transaction. So you really want to do your inspections early on. And now I'm going to turn this over to Travis Kep. He's going to talk to you about the inspection process and what he does and kind of how that all just works out. All right, so I'm going to stop sharing the screen. There we go. All right, Travis.
Where did you find that picture of that home at?
The internet somewhere. Yeah.
All right. So thank you, Angel. My name is Travis Kep. I own Southern Star Inspections. I've owned my company for a little over 7 years now. Just been in residential construction all of my life in one form or another. And this was just something I've always wanted to do, own my own business. And it was kind of a no-brainer to go into the same field that I've known and have the experience in. A couple things I wanted to make sure that we talked about today, not only what an inspection is, but what a home inspection is not. One of the things I always make sure that my clients understand is that a home inspection is not a pass or fail. It's not a buy or don't buy. A home inspection is not a good deal or bad deal. Essentially, my job for my clients is to go into the home with an unbiased opinion about the home and basically find essentially everything that I can, whether it be small items or large items, maintenance versus failure of certain things, and present it to you in a home inspection report. I've shared some of my sample reports that you can also find on my website. I have a couple others on my website, but I've shared some in the chat. I saw that Chad has also shared some of his documents as well. So Looks like they're mostly PDFs. You could download them and save them, and if you can review them at your leisure. But for me, you're hiring me to be your eyes and ears, so to speak, on the things that you don't see when you're going to look at homes. You know, typically when you're looking at homes that you want to put an offer on, a lot of times you might be looking at location, cul-de-sac or not cul-de-sac, 1-story, 2-story, countertops, appliances, layout, floor plan of the home, things of that nature. Whereas me, the home inspector, I'm going in there to look at the things that might not have caught your eye, or you might not have any knowledge to look at, such as removing the electrical panel covers and looking at the wiring that's inside the actual panel itself, running all of your sinks and showers and commodes, testing, making sure there's no leaks, make sure that everything is functioning properly, testing all your appliances in your kitchen, such as running your ovens, your cooktop, your dishwashers, getting in the attic space and taking a look around the attic space as far as the roof framing, any of the mechanical equipment that's inside the attic space, such as your furnace or your water heater, going around the perimeter of the home, taking a look at the foundation, getting up on the roof, any of the roofs that I can safely get on, which is most of them, minus some of the 3-story or 4-story townhomes in Houston proper. Basically, I also include all the model and serial numbers inside the report for you, for your appliances and your mechanical equipment. That way you know how old the AC unit is, how old the furnace is and water heater is. Also, it helps you with any potential service calls in the future when you have the model and serial number at your fingertips. I will typically be at a home probably for sure no less than 4 hours, but it could be up to 6 to 8 hours like today. It just depends on the age of the home, how many square feet the home is. I typically do 1 inspection a day, so I don't rush through it. I'm not trying to rush through a home inspection just to get to another one. And then I always try and meet with my clients at the end of the inspection to walk you through and show you what I found and answer any questions you have. Many times, especially when we're dealing with homes that are resale homes, a lot of the items in the report that you'll see are a lot of that to be considered just due to the age of the home, homeowner maintenance or their lack of. When you're dealing with maybe resale homes that are built in the 50s or 60s, I always try and talk to my clients about things that are to be expected versus obviously failures or things that are damaging the home. For instance, today, a lot of the actual receptacles in this home that was built in 1959 still had just the 2-prong receptacles, which are basically ungrounded receptacles. So, the first time my potential buyer, my client walked the home, they didn't notice that. And they have to be prepared to obviously talk about negotiations possibly with the seller, or being prepared to possibly get an electrician to change those receptacles out. So the fact of the matter is they had something that they weren't aware of when they first put the offer on the home, but now it's something for them to think about, maybe the cost of having an electrician connect and rewire the new receptacles so you can actually plug in a TV or vacuum cleaner or whatnot that we use today. Again, Angel said it, for an inspection, it's always best to get it within that option period, obviously, when you put down your earnest money and all that good stuff. But I try and get there even sooner than that, because sometimes even after the inspection, it's going to take some negotiations to maybe either get further evaluations. For me as a home inspector, I'm not a licensed electrician, a licensed plumber, licensed HVAC. However, I'm very confident in what I'm looking at in those particular items. But at the same time, when I find enough, what I use the analogy, enough cookie crumbs to make a cookie, it might be best to move forward with an actual licensed technician to obviously look at what I found, but then also maybe give you some pricing, some estimates on some repairs, estimates on some replacements. And that way you can either negotiate that or have that in your mind when you're working through your numbers as far as if this home is the one for you still. As far as the reports go, I typically start in the morning. I do my inspection. I'm there for 4 to 6 hours, maybe 8, depends on the house. But I'll always have the report sent to you by the end of the same evening. That way you can have it the next day. You can review it with Angel, and then obviously contact me if you have any questions regarding what I put in the report. My reports, if you had a chance to take a look at the samples, I'm going to attempt to share my screen now as well, just to show you an example of some of these reports. Can everybody see that?
Yes.
Sir.
Okay. So I'm going to go to this one. This is basically an existing home. You can see it, this home. I always include pictures inside my reports. This home, obviously aged 1920. This one's going to have a lot of goodies in here. But if you look down through the report, you'll see that my reports are broken up in either blue writing or red writing. Blue writing is always going to be information for my client. So essentially, a home inspector's job is not just to point out deficiencies per se. I'm trying to inform you about the home, letting you know where items are, such as your main water shutoff valve, letting you know where your gas meter is, things of that nature. So just a kind of example here of how I edit the pictures, have captions underneath each one of my pictures to point out exactly what I'm talking about. And each one of these pictures coincide with what I've said above within the actual verbiage of the report. Again, anytime my clients, I always make sure that they understand, don't get sticker shocked by the amount of pages that you get in my home inspection report. I'm very thorough. I'm not going to walk by something and think to myself, oh, they probably don't care about that. If I see something, it's going to go in the report. But at the same time, I can talk to you about what is priority versus what is to be expected. If we're looking at homes built in 1920, we've got to go in with the mindset, in my opinion, that it's not 2020 construction. So you've got to have some expectations there when we're looking at homes that have some age to them. Doesn't mean that they're ancient, but it just does mean that there's more options there for items to be called out in the report. Whether it be just something as simply painting, flashing, that's going to make it into the report. However, that, in my opinion, would not be something that you would have to do day one. The priorities typically lay whether or not it's actually damaging the home currently or it's a safety factor. Those, in my opinion, are the priorities. Those items are the ones that we really want to either think about getting done day one or having negotiations with the seller. As far as the types of inspections that I conduct, it's obviously resale homes, new construction homes, and yes, trust me, new construction homes need inspections as well. But we also do phase inspections. So this would be a phase one. This is before they poured the foundation. So I'm going to be checking out all of the form boards, the drain lines, the pads, the cables, things of that nature. And then also a phase two inspection. Phase two, or pre-drywall, sometimes it's referred to, is basically just that. Before they start covering everything up with drywall, checking the framing, checking the electrical wiring, the plumbing, HVAC system, just basically everything before they start to cover things up. And I've included these sample reports inside the chat, and then also they're on my website at southernstarinspections.com. Again, I hope this was a help. I'm not used to this Zoom call atmosphere. Usually I talk a lot with my hands, so that makes me a little bit more comfortable, but I'm trying not to do that right now. But the main thing is, if you have any questions, please don't hesitate to put it in the chat. As far as my fees go for a home inspection, Chad mentioned it's one of the parts that's not, I guess, kind of bundled in with everything. My fees are based on square footage and year the home was built, to be honest. Essentially, an older home that's a bigger and older home, it's going to take more time, and that's just really the way the pricing is laid out. But it's always upfront to where everybody knows everything. For me personally, I do not conduct termite inspections or pool inspections. I basically focus on what my background is and what my expertise is. As a home inspector, I can go get licensed for termite inspections or pool inspections, but by no means do I feel like I would be giving my clients a good quality inspection in those topics, just because I don't have the background or the experience. So I recommend to actually get expertise in those particular fields if you did want a termite inspection or if you did want a pool inspection. So again, thank you so much for joining us, and I'm going to pass it back to Angel. If you have any questions, obviously we're here for with the chats. I can answer anything you like.
Hey, Travis, you've got a couple questions in the chat if you want to look.
Oh, cool. All right, awesome. me figure out how to open that up real quick. Stop sharing. Talk myself through this. All right, this is cool. Let's see what the questions are. Okay, awesome. Let's see here. Make sure I didn't miss one. Brittany, Travis, similar to looking at the plug in the walkthrough. Okay, are there other things you would say clients should keep an eye out for prior to putting an offer? Major deal breakers. I would simply. Okay, good question. Okay, so basically, Brittany is asking if there's anything that a potential buyer could possibly look for while doing a walkthrough of a home, visiting a home to kind of see what it's like. Obviously, in real person, not on the computer or through pictures. Yes, for me, the number one thing for me is going to always be foundation. So a couple things that you can look at a home when you're trying to tell, okay, how's this foundation? Open and close doors, see if they're latching. Of course, maybe you can't open all windows, but that would be something, maybe one or two. Look for cracked tiles and look for step cracks in drywall. So essentially, every house is going to settle, and every house is going to have settling cracks in the drywall or nail pops. But essentially, when you see that crack actually changes direction and something that we call like a step crack, if that's over the top of windows or doors, it could be basically a sign of excessive settlement. It's not necessarily meaning it's automatic failure of any foundation. It's just those type of items can help you really start with the base of the home as far as the foundation goes. Other things you can look for, I mean, I don't know, Angel, you can tell me if I'm wrong, but maybe during the showing of a house, I mean, can you run water at a sink and see if something's leaking? I mean, things of that nature. You can walk around the perimeter of the home, the side of the home where the AC unit is that nobody's been over there for the last, 3 years. A lot of times it's out of sight, out of mind, and there's things going on over there that kind of show the gist of homeowner maintenance possibly, those are some things that you can kind of just quickly look at. Now it's hard to understand when you're potentially buying a home. You want to see countertops, so you want paint colors, flooring, the layout, but there are those things that you can look past real quick just for 5 or 10 minutes to kind of pick up on some of those things. And if you want some more, if I don't answer your question, I guess, exactly, you can always contact me directly. Let's see. Okay, so Rashad, are buyers responsible for finding deficiency or for all deficiency costs found in the inspection, or can they be negotiated between buyer and seller? So essentially, yes. I mean, like I was saying with the inspection report itself, it's not a buyer don't buy. It's not a pass or don't pass or fail. It's not a good deal, bad deal. What that means is, again, my job is to unearth everything I can for you, and the lack of a better term, kind of laid in your lap. Now, that's kind of where, when the report gets sent to you and Angel, everybody kind of convenes and then starts going over what's going to be the addendum, I believe, Angel, or what's the negotiation list. So let's just say the house, you've gone through my inspection report and you've picked out maybe 8 items that you want to put on the addendum, which is the negotiation list with the seller. That's where negotiations start. The seller then will get that list and they say, we might be able to take care of 4 of these 8 items. And it kind of goes back and forth. Angel will probably have a lot more information on this. Or they might just say, you know what? No, as is, take it or leave it type deal. And then that's kind of where it's back to you, or you might ask for actual costs off the home. Again, I don't want to step on Angel's toes here, but she'll be able to talk a little bit more about that. But essentially, at the end of the day, a seller, I mean, is not required to really fix any of the items that I find. I mean, obviously that wouldn't be very smart for a seller, because then obviously their houses are going to remain on the market forever, and they're going to have inspector after inspector after inspector go through there. So are the buyers responsible for all the deficiency costs? I would say no. I think it all goes through negotiations at that point. Maybe Angel, you might have a little bit more on that particular question.
Yeah, so general rule of thumb is, in the Houston market, with the way it's been over the past few years, it has been in general a seller's market. It's not currently an aggressive seller's market, but it is still a seller's market more so than a buyer market. Even when the market is completely stabilized and it's considered neutral, sellers would still say that it feels more like a seller's market than a buyer's market. It isn't until we really transition to an excess of supply that buyers kind of run the show. So our general rule of thumb is if a specific item in the inspection report, which when Travis gives you an inspection report, it's going to be over 30 pages and it's going to have a list of 100 deficiencies. Some of them may be very small, like a receptacle that isn't operational or isn't securely fastened, or it might be something like labels missing on your breaker box, or it could be the air conditioner is failing. So our general rule of thumb is if the repair item is less than $500, it's unlikely a seller is going to negotiate and agree to pay for that or reduce the price or fix it. Like they're probably not going to address things under $500. But that doesn't mean that every seller won't. We usually take that list of 100, we turn it into a list of 10, and then we go back and see what we can negotiate. At that point, it's good for you to know what your threshold is. At what point are you walking away? Like, what will you accept? What will you not accept? And what works for you? It's prudent to go into this process prepared to know you're going to be spending some money in the first year or two to do some repairs. You don't want to buy a house and have absolutely no cash for any repairs. My house is a great example. Travis inspected it, gave me a beautiful 40-page report. And the day I moved in, I noticed a pipe had burst outside my house, like a supply line. And that was not on the inspection report. And Travis didn't make a mistake. I went through and all the pictures were of beautiful green, dry soil, like green grass and dry soil. But somehow between the inspection and the day I moved in, a pipe burst and that area was soaking wet. And it cost me $800 that very first weekend. So like you want to make sure that you're prepared to spend some money doing some kind of repairs. If you don't want to do repairs, it's going to be in your best interest to buy a brand new house because it comes with a 1-year warranty. I hope that helps. I hope that helps a little bit. Most sellers are pretty agreeable working with you if there's big ticket items because they won't be able to sell their house otherwise. Keep in mind also, old houses have to have some level of expectations with the old houses. They're going to come with problems, and sellers again are willing to negotiate some things, but they also expect you to have proper expectations that an old house has old house problems, and they're not going to fix everything. They're not going to make it a new, modern, updated house. So if you want an old house for whatever reason, sure you can afford old house problems. Any other questions, Travis? Okay, we're going to move on. We already covered that negotiations for anything under 500 are typically not things we negotiate. So what we do during this period, we're still in the option period, and Travis has done your inspections. Maybe he's recommended that you have an electrician or a plumber or an HVAC contractor come out and look at the house to evaluate those systems because he had enough breadcrumbs to indicate that there is a bigger problem. So we need to have those people come out, and we need to figure out what you want to negotiate, and we need to negotiate before the 10 days are up. So hopefully we'll get Travis out in a couple of days, and then we'll get those other guys out right behind him. If necessary, we can extend the option period, but we need the seller's approval to do that as well. So we need both parties to agree. So we don't want to use that until we have to use that. So we just want to make sure that that everyone is moving as quickly as possible without rushing, and that everyone is available to communicate and work through these things because we're going to need to just be talking to the seller and to each other a lot in that first 10 days. Once we get the list of things you want remedied, go back to the seller and we'll request either repairs or a purchase price reduction or a contribution to your closing costs, depending upon your preferences. And we'll go back and forth a couple of times until we reach terms that are hopefully agreeable to both parties. If we do reach agreeable terms, we'll sign an amendment that amends the original contract with the new terms, whether it's a price reduction, a closing cost, or that the seller agrees to repair something. And at that point, we move into the next phase, which is where you'll see properties on har.com that say pending. A pending transaction means that that house has a contract, but it's moved out of that option period. And that it's moving forward towards. At this point, You probably won't talk to Travis again unless you need him, or you're buying a new construction home and he's going to come back later for like another inspection. You will be talking to your lender, and they're going to be requiring a lot of different documents because they're going to need your authorization to order an appraisal. They might need new bank statements, all kinds of things. So you'll be talking to them, and you'll also be talking to Candace, who's your escrow officer, because she might need you to sign some or do some things so that she can complete whatever she needs to get done in order for you to close when the time comes. But if we do move forward and you don't decide to terminate the agreement and get your earnest money back and go find a different house, if we do move forward, your appraisal is probably being ordered. And that is something you do usually pay for outside of you pay for that up front. It is part of your closing costs. Chad has already factored it in, but he's going to ask you to authorize it and pay for it. And he's going to submit a request to a third-party servicer that's going to then send out a request to all the appraisers saying, hey, wants this, kind of like a Grubhub thing. And an appraiser is going to pick it up. Odds are it might be somebody at Alex's firm, and Alex is going to talk to you about the appraisal process. All right, you're up.
I'll take it. Before I get started, I just want to make an observation. If you look behind Travis, he's the guy I want inspecting my house with all those degrees. So good job there. Look up on these doors. My name's Alex Massa. I'm the owner of Initech Appraisals. We're the largest residential appraisal firm in Houston. And we're going to just go straight to basics. And I'm going to answer some questions that I'm sure that you have. First and foremost, what is an appraisal? An appraisal ultimately is an opinion of value. I want you to remember that because there might be a test at the end. An appraisal is an opinion of value. The appraisal is performed by a licensed or certified appraiser. In order for you to become licensed or certified in Texas, you've got to go through some stringent guidelines, tests, and an apprenticeship in order to become an appraiser. So only a licensed or certified appraiser can perform an appraisal. And what we do when we perform an appraisal, we actually go and do a site visit. Similar to an inspection, but we're gathering different information. What we're doing in that process is, one, we're measuring the house to verify the square footage. Two, we're looking at cosmetically, what does the house look like? What condition is it in? We're also looking to see what kind of quality finishes the property has, what's around the property, and ultimately what we're doing is gathering data about that house, and we're going to take it back to our office, and that's when the real fun begins, which is the analysis. And the analysis involves us looking for other homes that have sold within the same market area that are very similar to the subject in the past 12 months. And what we're doing is we're comparing the subject property to those sales, which are now called comps, comparables. And we're trying to determine a specific value based on specific guidelines that FHA, VA, USDA, and Fannie and Freddie have. And at the end of the day, what we're putting together is not only an analysis of what comparables are available, but also an analysis of what the market is doing. What's the trend? We've talked a little bit about buyers and sellers market. Well, that's one thing that an appraiser will analyze and will determine, is this a buyer's market or a seller's market? We call it undersupplied or oversupplied. Right now, we are in an undersupplied market, which means it is a seller's market. If you look at the grand scheme of things, in HAR and all of Houston market area, we're probably at a 3 to 4 month supply of homes, which is healthy, and a little bit undersupplied, to be quite honest. 6 months supply is what's considered basically on par and even. Anything over 6 months is an oversupply. So what is an appraisal used for, and who orders it? So Chad will be ordering the appraisal. Angel, you touched up on this a little bit. Chad sends it into what's called an appraisal management company. An appraisal management company will actually select the appraiser that performs the appraisal. It's completely independent. Chad has no authority or guidance on who the appraiser is or how to select the appraiser. The appraisal management company is an independent third party that orders the appraisal, so they're completely independent. One question I wanted to answer is, what is an appraisal used for? And we're trying to determine what the value of a home is. And what we're trying to do is determine if the value of that home is sufficient enough to cover the collateral of the loan. which means, is the value of the home enough to cover the sales price? And that's ultimately what we're looking for. If a home is appraised at or above the sales price, you'll probably never hear anything about the appraisal. Now, if a home comes in below the sales price, that's when some issues come up. And Angel, I know you wanted to talk about what happens when an appraisal comes in below the sales price, or reasons on why an appraisal comes in low. There's multiple reasons why appraisals can come in low. One is the house is smaller or measured smaller than what the county appraisal district says. This is very common, not super common, but it's common enough for it to be an issue. And one of the things we're doing is verifying that. But once you get your appraisal, if it does come in below the sales price, you've got options. One, your realtor and the listing agent can perform a rebuttal. And what they can do is they can provide additional data or additional sales that might sway the appraiser into changing their value, or the appraisal might not change. And in those circumstances, it could affect the way your financing works. It could affect how much money you've got to bring to the table. But 8 times out of 10, it's not going to ruin the deal. It's just another point where you may be able to renegotiate. And really, that's all I have for you. It's just kind of the simple appraisal analysis. Like I said, if you talk to most people that are involved in this process, there's only one number that they're looking at in the appraisal, and that's what value did it come in at. It's not an issue, again, if it comes in above or at the sales price. It can be an issue if it comes in below the sales price. And that's it. So I want to thank you guys. Do y'all have any questions? Anything in here in the chat?
I don't see anything.
Well
Thank
done,
you so
sir.
much, Alex. Thank you.
Thank you.
He hit it right on the head, really. You don't have to worry about the appraisal unless it comes in low, and that doesn't happen a lot. If it does, that is a contingency that we're going to put into the contract. We're going to set it up to where you do have the ability to walk away and get your earnest money back if the seller isn't willing to bring the price down. One thing to keep in mind, though, in a really competitive market, there sometimes bidding does go above the list price. And if that happens, there are people out there who sometimes can actually afford that difference, even if the appraisal comes in low, and they'll choose to bring more money to the table and actually pay the difference. That sounds terrifying, the idea of paying more than a house is worth. But if you're going to be in the home long enough to have that appreciation catch up to you, then it's not a horrible thing. If you're only going to be in the house for a couple of years and you're going to try and sell it, then that may not be good because you may have overpaid and now you're going to lose money trying to sell it. But if you plan on buying a house and living in it for 5, 10, 15, or even the entire 30 years of your mortgage, it's not the end of the world to pay a little bit extra. And that's when you'll see people doing it. Like, you may be completely surprised at how, why in the world would somebody pay $20,000 more for a house than it's worth? We see things like that happen in the Heights because people are settling down. They already lived in their first home. Now they're moving into their family home that they're going to stay in for 15, 20 years with their kids. And so they're not really worried about what the value is today. They know they'll make it up in the future. But again, we don't see it a whole lot. We saw it a lot after Harvey, but we aren't seeing it. The market isn't quite that aggressive right now. So it shouldn't be something we encounter often in this next year while we're possibly working together.
I have one story I'll share it's from a while ago. It was probably, I bet it was in 12 or 13, but I was working with a client who was buying a second home. Remember I talked about those independently wealthy people? Well, he was one of those, and he was buying a second home in Naples, Florida. Why he was calling me, I don't know, but he was buying a $2 million house in Naples, Florida. He was only borrowing $500,000. Well, in those instances, we as the lender, the appraiser would have to come extraordinarily low for us to actually care. But on that home, he bought the house, or he was buying the house for $2 million, and the house appraised for like 1.75. So it came in $250,000 below the value, and he didn't care. He's like, I don't care. My wife wants the house. So you do find those instances where people truly don't care. That obviously is an exception to the rule and very, very rare. But the one thing I'll add is I would say 9 times out of 10, If an appraisal comes in short of our sales price, it tends to work out, whether it's the seller comes down or we meet in the middle, which is probably pretty common. Usually each side may give a little bit. And I think, Alex, there is a question in the chat box. Did you see that?
Yeah, it says an appraisal comes in under, typically how much lower is it? 1%, 5%, etc. It really, there's no answer to that. It just depends. We had one the other day that came in 30% below the sales price. Really good comps. It just wasn't priced right, and it measured much smaller. So it really depends. If we're within 1%, we've got some leeway. Again, appraisal's an opinion of value. There's a range. If it's within 1%, we're trying to get to the sales price just to make it a clean deal. If it is going to come in low, it's usually probably in the 3 to 10% range. Good question.
Yeah, that's a great question. Any other questions? Are you guys ready to move on to the next step? Okay, so if we need to negotiate the appraisal, we will. 9 times out of 10, it works out. We negotiate the purchase price and you get to move forward. Very seldom does it not work out where you have to go find a different house. Very, very seldom. I've only had that happen once in the past 7 years, in the past, couple hundred transactions, one time ever. And amazingly enough, the seller had overpriced the home, and the seller was in the lending industry and knows exactly how all this works and just didn't care. She wanted a certain amount of money for her house, and that's all there was to it. She still has not sold her house.
Oh, I remember that.
But moving on, after we renegotiate if we need to for the appraisal, or we just move on in general because the appraisal came in perfectly, it's going to be time to start setting up your utilities, scheduling your movers, ordering your home warranty, and getting your home insurance. If you're financing the property, you have to have insurance. And if you aren't financing, you should have insurance. So Mark with Rafail Insurance, who he provides my insurance. Actually, everybody here on this call has done something for me in my real estate transactions. But Mark's going to tell you all about insurance and why you need it and what kinds you need, because there's a lot of different insurance that you can have. And he'll sell you any of it. All right, Mark, you're up. But you're muted.
Unmute. Howdy, everybody. Great. So, hi. Thank you, Angel. And I've had the pleasure of working with all of you at some capacity. Travis actually did my inspection 6 years ago in my townhouse. It did an excellent job. So, first I wanted to give you maybe a 2-minute background about our agency. Then I'll go into what homeowners insurance is, what it covers, what it doesn't cover. So I will screen share. Let's see. This one. Share. Can y'all see my screen?
Yes, sir.
Thumbs up? All right.
Yeah.
You see this, my PowerPoint?
Yes, sir.
All right, awesome. So we've been in business for 11 years. And those 11 years haven't always been the best, but I think knowing the background from then to today really helps. So this is our staff, a team of 7. I always like to let everybody know notable failures. I started in insurance in 2007, worked for an agent, couldn't really get it together, did awful, found myself in debt, and ended up getting in oil and gas in the best time, 2008, got laid off 2009, still had my insurance license, and decided to take a loan out and start my own agency. And lo and behold, I decided to hit the streets, going to real estate offices and businesses and getting our name out there. We got awarded Farmers Insurance Rookie of the Year because we did a bunch of small stuff. We started with people that were renting condos or apartments and grew with them. And we got Home Insurance or Property Agent of the Year for multiple years, Business Insurance Agent of the Year, and now service over 4,000 insurance policies. I got a team, which I think is important. The difference between an agent and a 1-800 number is something happens, somebody's going to pick up that knows your name, right? So I've had Nancy for over 9 years. Elaine handles customer service and home quotes. Megan, the boss, my wife. And we insure a couple businesses in the Heights and restaurants. And we had a mascot. She passed away, but she still has a tradition here, guys. So that's the short and sweet of the office. Now, I want to get into home insurance. And let me stop. Oh, lost my.
Mark,
Picture.
Yes.
I uploaded some files to the chat for all of you guys. A couple of different policies that Mark has provided as samples, so you guys can get an idea of what those look like.
That would be better. So I'll stop sharing mine. And see. I will go over this home insurance quote. Download. Oh, I'm having technical difficulties. Bear with me, guys. How am I able to open this? I had it open. Well, I will.
Here,
If you guys open this, okay, that'd be great. So while we're pulling that up, and thank you, insurance isn't insurance, right? This is my personal home policy right here, and what I wanted to do was go through the coverages. And basically, if the home burns to the ground, it's not what we bought the house for. It's not what it's appraised for. It's what is the reconstruction. And every insurance company is going to have their own estimate as to what it costs to remove a house and rebuild it from the ground up. So if you see in the middle, it says $292,000 is the estimated reconstruction of my townhouse in the Heights. And that's not what I bought it for. Now, something to keep in mind is underneath this, it says extended replacement cost. It's a bell and whistle that I like, because if a hurricane happens and everybody's calling the same home builder to rebuild, it may be inflated. Cost of lumber may go up. So an extended replacement coverage would provide my policy an extra 50% if that $292 wasn't enough when a custom home builder had to come and rebuild, which is really important to know. Personal property, that's everything inside the house. You flip the home upside down, typically every policy is going to come with a percentage of what your home is valued at and automatically assume you up to $160,000 in coverage for your personal items. Now, in the middle, it says replacement cost. This is something I think is really important. You have a TV, you bought it today for $2,000, but the fire happens a year later, and you go through the itemized list, and if an insurance company decides to say, oh, we're going to depreciate, there you go, thank you, everything, then you might be getting a fraction of what it takes to rebuild or replace your items. A good policy is always going to give the replacement cost of your items. Now, things not covered on that are things like jewelry. If you want to add heirlooms or jewelry, appraisals are going to be needed, but that it's always good that your insurance agent mentions that, because if, say, your wife loses her wedding ring, I don't want to be the bad guy, so always bring that up. Your liability on a home policy is also important. If the fire is your fault and ruins a neighbor's house, or somebody gets hurt on your property, the maximum liability doesn't cost a lot on a policy. This matching coverage is a bell and whistle. Let's say a kitchen fire happens, insurance company comes in and fixes it, but now the other half of the house has old paint from the exterior, but nothing got damaged there. The insurance contract is meant to fix whatever was damaged. However, with this matching coverage, even though maybe part of the house wasn't damaged, they'll pay an additional $10,000 maybe to match by painting the siding or whatever wasn't damaged, so your house is back in good shape. Separate structures. This is things outside of your house. fencing, landscaping. Maybe you have a shed. I'm in a townhouse, so I don't have many items outside there. But if you are a detached garage and you do have a shed, you would want to consider making sure your separate structures is covered. Loss of use. Imagine a pipe bust or your house does catch on fire and you really need to find a place to stay. It might be 2 weeks in a hotel. It might be a whole year to rebuild. This $87,000, when you divide that up, it can cover renting maybe a townhouse a couple blocks away or close by, or renting an apartment for a whole year. So when you add up all the coverages your policy could pay out, it actually ends up adding up. When you add up 292 plus 160 plus the things outside if they got ruined, this little policy right here can end up paying out close to $500,000. And I take it serious because the difference between good insurance and bad can ruin somebody's life. So, and I'm going to scroll down here to the deductibles. How does a policy pay? So you're going to notice I got 3 deductibles here. And how is it calculated? It is a percentage of the basic home reconstruction, that 292 number that you saw initially. So a percentage, 1% of that is $29.20. So if the home burned to the ground and you added up the reconstruction, your contents, the hotel expenses, they would cut you a check minus this $29.20. If it's a wind or hailstorm, they'll cut you a check also minus $29.20. And how does a wind and hailstorm come into play? If hail ruins the roof and they got to replace it, an average roof might cost about $15,000. Now, tropical cyclone, fancy wording for hurricane. Hurricane hits your house. Average in Harris County is going to be 2%, which is $5,800. Sounds like a big number, right? However, when a hurricane hits a house and it causes an opening, we're talking roof, interior damage, and sheetrock, and everybody in the neighborhood's getting hit. So I've had hurricane claims that look like it was nothing, end up being $75,000 due to interior water damage. So same scenario, they cut you the check minus $5,800. Now, the reason I like a company or a name brand like Farmers Insurance is if a claim happens, they actually employ their claims adjusters. So they're going to come in as a team to get things taken care of. Whereas if you go with the smaller company, a lot of times they outsource their claims, and there becomes kind of a disconnect between the third-party claims folks and whoever your insurance company is. So whether it's Farmers or Allstate or whoever the carrier is, I like the carriers that have good claims reputation. Now, Chad, if you don't mind, I'm clicking on that flood insurance tab. Thank you. And we'll scroll down to the bottom right. That's perfect. Perfect. So a lot of us, we mentioned Harvey, and Chad, when he does his calculations for home insurance, the way we look at it is you're in a high-risk flood zone or you're in a low-risk flood zone. A lot of people used to say, I'm not in a flood zone. And that's what got a lot of people in trouble. The reality is we are all in a flood zone. And if you're going to insure your biggest asset for everything that could possibly happen on God's green earth except a flood, well, to me, that's the biggest exclusion. Why is it that every insurance company excludes it? It's because it's too big of a risk and nobody wants to take it, which is why every insurance company excludes a flood. The good news is the government steps in and they will provide a meat and potatoes policy that will insure up to $250,000 for your home and up to $100,000 for your personal items. You do have deductibles of $1,250, but the annual cost, everybody, is $516 a year. And I've had people shooting themselves in the foot had they known that the biggest exposure we have in Houston is the biggest exclusion on the home policy, but we could have insured it for $516 for the entire year. So if you don't have flood insurance, what did a lot of people get forced to do? They were forced to take out another mortgage, another loan, and now they're paying two notes when in reality a $516 policy could have taken care of that. The other thing I want you guys to be aware of is if you take out the flood policy the day of closing, and I think a lot of people weren't aware of this, the government will waive their standard 30-day waiting period to pay out a claim because financing is triggered. However, if you wait the day after or a month after, or in this case, it's hurricane season starting next month, and you see, oh gosh, we got a storm coming, and you call to take out a flood policy, they're going to administer a 30-day waiting period. So I encourage you, the day of closing, take out your flood policy. It can be made on a credit card. And if you notice in the middle here, an estimated replacement cost, $340,000. This was another property that I had quoted, but the system showed that to rebuild that structure is $340,000. But the government goes up to $250,000, whether it's an inch of water or a foot. You got to gut the first 4 feet, right? But sometimes people have big one-stories, and gutting to the entire house, sometimes 250 is not enough. A lot of people did not know that private insurance does exist and could get you the coverage above the 250. However, if everybody out there had at least the basic 250, it would save a whole lot of money and trouble. What are things that are not covered on a home policy? One is workmanship. So in the case you buy a new construction house and it was just not built properly and you find yourself having leaks that were going on for years, home insurance is meant to cover perils like storms, fires, theft, vandalism. But if it's just bad workmanship, that typically falls on the builder, which is why it's really important to have somebody like Travis come in and let you know if the home is built up to par and save people a lot of headache and legal fees. Now, how does your other insurance Chad, you can minimize the screens now, and I'll just put some food for thought here. Why is it important to have good liability insurance on your automobile? A lot of times people buy a house, $300,000 house, but they're driving around with $30,000 or $50,000 in auto liability. The reality is, if you hit a kid or a bike rider, they fall off the bike and dad's a lawyer and sues you for a couple $100,000, you don't want your house to be at risk, because as soon as that $30,000 is up on the auto, a good lawyer is going to try to go after your assets. Now, even if it's protected, if you owe somebody their medical bills, they could ruin your credit for life and you won't be able to buy another house. So the recommendation is hold your auto liability at $250,000 and get $1 million umbrella policy. The umbrella is like your lawyer that really protects your house in the case you get in a serious accident. The average cost for an umbrella, everybody, is about $30 to $40 a month, and that's way easier than paying $1 million if you got in a real accident. Now, it's my job to say these things because I simply don't want to put somebody in a predicament where their credit's ruined for life and somebody's going after everything. The last thing I'll touch on is if you have a mortgage and you have people that depend on you, take out some type of mortgage protection life insurance where if God forbid something didn't happen to you, that you're not on Facebook doing a barbecue trying to fundraise. You have a policy that will take care of the mortgage and you can continue on, so to speak. Now, we are a farmers insurance agency. However, our contract allows us to shop multiple carriers. So what affects home insurance rates? One is going to be the location. Two is going to be the age of the home. If you find a home that's 20 years old and hasn't been updated, well, you might find the insurance rate to be higher. But if you have a 20-year-old home and it's been updated, well, hooray. The rates are going to go down with any company that you work with. So the age of the roof is probably the most important thing when looking at a home policy. And then I'll continue on with, when Angel's touring you and you find that dream house, if you come to us just to review the home insurance, a lot of times we can pull if that home has had claims. So example, hey, I see a $45,000 water leak that happened 3 years ago. Now Angel can go back and say, was it fixed properly? Does it have a mold remediation certificate? Because if not, now we got people's health at risk. So just looking at the home insurance to look at the claims history could really help you, because if that person took the insurance money and used a contractor that wasn't up to par, maybe they didn't fix it properly. Maybe they didn't fix it at all, right? So knowing whether the home's had claims is very important. And making sure that you fill the gap with flood insurance, I think really saves people. So if you have any questions, my contact info, I'll put in the chat box. We really take pride in who we work with, and I appreciate you guys giving me time today to give you a little 101 on insurance.
Well done.
Thank you, Mark. Really appreciate that.
Thank you.
Yes. That was good. That was really helpful. That was a lot of information about insurance, which if anybody loves insurance, it's Mark, you guys. So we are moving on, and we're almost done. After you, at this point, I mean, you're setting up insurance. You're probably close to closing on the home. You're waiting on one key component, and it's going to be the clear to close from the underwriter who's processing your loan. When you get clear to close, at that point, we're able to kind of confirm that your closing will occur, and we can schedule it for 3 days or farther out from the day you receive your clear to close, as long as you acknowledge that document the same day. That's a little bit too much. We'll definitely make sure we're reminding you of things like that when we're in a transaction. But the key thing is, once you get the clear to close, you can't close any sooner than 3 days from that day. So if we've scheduled you an earlier close, we'll need to go ahead and push it a little bit. But we're typically pretty much, when this team is all working together, we usually get everything done in the allotted contract time. Once you get the contract to close, we are going to schedule your closing, and we're going to probably go meet with Candace at her office. And you will sign a bunch of documents, and you'll also need to make sure that your money is there. So Chad's going to talk to people on his end to make sure that they send the large sum of money that is not your down payment or closing costs. So if you're buying a $300,000 home, he's probably sending somewhere between $240,000 and $280,000 via wire to the closing company. And then you're sending money as well. It's going to be your closing costs and your down payment. And those two items have to get to the closing company. You have to sign all your documents. And then when the seller has signed, and the seller has to sign all their documents. The seller signs, the buyer signs, and all this money shows up. And once that's happened, then Candace is able to say that you have officially closed and funded, and she can give you your keys. I have totally failed to share this PowerPoint with you guys the whole time, so I'm going to make sure I send it to you. For some reason, that just escaped me. But Candace is going to kind of fill you in a little bit on what she does. She's always behind the scenes, just making sure things are working for you. But she's a very important part of the transaction, and we wouldn't be able to actually close on time without her. And then make sure you stay on the call. We're going to do a quick little quiz, and those of you who get answers correct to some of these questions will be able to win some gift cards, and we have some really great gift cards to some awesome local businesses and a few other places around town as well. Candace, it's your turn. I'm going to mute myself.
Hi, I'm Candace Hildebrand with Inter-America Title, and I've been in the title business about 100 years, and I'm the last person you'll see. I will schedule your closing, and you'll come to my office, buyer and seller, to sign the documents. I work closely with all of the players here. I need to make sure everything is completed, appraisal, inspection, everything gets done, and I'm the very last person you'll deal with. A lot went on, a lot of conversation here tonight about the different components of home ownership. And if you're first-time home buyers, which I'm pretty sure most of you are. Aside from all of that, everything is pretty easy because you're working with professionals. It may sound complicated. You need a loan, you need an inspection, you need insurance, you need an appraisal. It's truly not as complicated as it sounds, especially if you're working with Angel and crew. It's a super easy thing, and I always say, I'm going to be your mother here, more or less. And whatever obstacles might come in your way, buy a home. It's the most easiest and most fabulous way to build wealth. So if you're renting right now, take the first step. I'm sure everybody looks on HAR or Zillow or what have you. Contact Angel, have her set up some viewings for you. And I'm the last one, so I was listening to everybody, and I've done quite a few of these seminars. And the most important thing to take away from this is stop renting and start. You need as little as 3.5% down. And if you have any questions of what I do, put it in the chat room, and I'll be happy to answer any questions you have. Angel?
Thank you.
Take it over, Angel.
So much, Candace. Okay, so that is pretty much the end. So if you guys have questions, feel free to go ahead and start typing those.